moving back to our environment. So basically what I've done here is, let's start from the bottom. First, I have imported Bitcoin data from Yahoo Finance for the past 10 years. As you can see, I have imported it from 2015, imported and created a small data structure in our Python environment, which is called a data frame. And basically this is the data that we have. So we have prices, closing prices, high price, low price, opening price, and the volume of that day particular. And we have such data for like 10 years. So this is the main function that we backtest function. This is the data that we have added here, and this is the strategy that will be running on $1 million cash, let's say, with commission being the same. So white light combined is the strategy that I'm running. So what basically the strategy is doing is, it's a combination of multiple things, which is, it's a combination of golden crossover for 50 days SMA. Then it has some strategy related to short-term decision making based on short-term SMA, like 20 days. And then it makes certain decisions based upon RSIs. It checks if the RSI is oversold. If the RSI is less than 35, it will make some decisions. And then we have something related to volatility in the markets. So as I told you before, the first function that runs is the init function, which is basically an initialization function. So you have all this information, which are variables, which are fixed variables. And here basically what we're trying to do is trying to calculate those SMAs for particular day. A similar thing we are doing, we are calculating 50 days SMA, 20 days SMA. There is already self-written functions in it, and we calculate the RSI, we calculate the volatility. So basically initialization function is to initialize all the value and calculate all the values. The next function that runs after we initialize all the values is the next function. So in the next function, basically there are two conditional things. First is when to buy, and the second is when to sell. So these are some if statements. If these if statements are true, the system will give a buying signal. For example, in this position, we are checking if the market is in bull market. There's a condition called if price is greater than SMA, the market is in a bull run. Is golden crossover. If price is more than 250 and 50 days crossover, then it's in above golden crossover. So in this function, we are buying if the current position or the current price is in bull market, which is greater than 250 SMA and is above golden crossover and has an RSI which is less than oversold RSI. For example, the oversold RSI is 35. So our RSI should be less than that. Our RSI is less than the oversold RSI, or the prices are less than the golden crossover. We also check for like if the market is volatile. If it's not volatile, then only we'll make the buying call. If it's volatile, we will avoid buying on the particular day. Similarly, there are some certain conditions of when to sell in the market. You can read through it and understand. It's pretty easy if else statements. And when we run this code, you can see it generated a report, an output report. For example, if we would have invested $1 million in the 10 years, we would have equity value of $6 million. So basically we have a 6x done generated over a period of 10 years. And we have a average CAGR of 35%, means we are generating 35% per year on a yearly basis. Now let's check the chart, and you can see that we have made a lot of trading positions throughout the Bitcoin's life cycle, and we can see we have a win rate of 42%. I would suggest we increase this win rate because 42% win rate is still less, but we should push it to like more than 50% so that we can have an edge into the market. Now in this chart, you can clearly see that there's obvious disconnect that we have making a lot of smaller trading positions, which I don't think we should make at current position. So how we can improve that? Basically, we are trying to reduce the number of trades that we are doing, because I think we are doing a lot of tradings and I want to reduce that. Why? Because I think this is a clear sign of over trading that we are doing, because we have added a condition for 20 days SMA. So if you add a condition like 20 days SMA, there will be a lot of trade taking place, because 20 days SMA moves pretty frequently compared to 50 days or 250 days SMA. So there are a lot of trading calls which are done near 20 days SMA, which I don't want. So in the next code, what I will basically do is I will simplify my strategy. I will basically remove the volatility function, because I don't want to check volatility, for example. I also don't care about the short-term SMAs. I don't want to do short-term trading into the markets. I'm a long-term investor and I want to swing trade into the market. I don't want to do short-term 20 days SMA trades. So basically I coded that. I removed a lot of code. I simplified my strategy for just golden crossover and 250 days SMA, and I try to run this. Pretty interesting thing that is observed here is that, as you can see, I think this is close to 300 million maybe. So we have generated almost a CAGR of 64%. So the first time we did a lot of over trading. This time we reduced the over trading and did some long-term swing trading. For example, you can see in the chart there are less buy and sell calls. There are total 36 trades which we have done positively, and you can see there are less trades made compared to the previous strategy. But still we have generated more CAGR than previously. So this is a clear sign of over trading. So you can basically create such hypothesis and test your own logic and strategies, and it's very simplified. You just code if else statements and execute your logic basically, and try to test out edges. I will discuss what is edge in the upcoming videos, and we'll understand how you can look for edges in the market, and because edge creates winner, right? If you embed edge into your strategy, it will generate a lot of returns for you. Similarly, if you want to know specifically on which day and at what position you did buying and selling, you can just use stats and trades. It will basically dump all the data of the trading that you have done. For example, how long you have hold the position. For example, the initial position was hold for almost 2-3 years, and then you have some smaller trade positions which lasted for 1 year, 6 days. So it shows how much money you have generated on over a period of time. Micro details of when you sold, when you bought, and what was the SMA for that day when you bought. Now the next thing is how we can improve our strategy, how we can optimize our values. For example, I'm using 50 days SMA and 250 days SMA, right? But for every particular asset, there will be certain optimal values. For example, let's say Bitcoin has an optimal value of 290 SMA and 20 days SMA. How you can find that? So you have to find an optimal solution that gives the highest return. For example, let's say I want to maximize my CAGR. So it's 64% right now, but I want to generate more returns on the same strategy. So I need to find the optimal values of my SMA. That you can do by using the optimization module of backtesting.py, which is super easy. You just have to put optimize and you have to put the range of your values. For example, I want to check within the SMA, bigger SMAs from 200 to 300, which is the optimal value for Bitcoin prices. And for short-term SMAs, which are the best prices for 20 to 100. So basically, what I do is for larger SMA, I check from 200 to 300 at an interval of 10, and 20 to 100 for short-term SMA, similar at the end interval of 10. And I try to maximize the CAGR. For example, currently we are generating 64% CAGR. I want to maximize it. I want to push the boundary of CAGR based on my strategy. And I basically run the optimization module. It's trying to test again and again and again with multiple values between the given range and checking which is the most optimal thing that we can get. You can see that we are able to improve our CAGR by 2%, and this has happened because we try to optimize and find the optimal value of our strategy. Now let's see what is the optimal value for our strategy. It shows that our optimal values are 290 and 20. So initially we took 250 and 50. If you trade between these two SMAs, you will generate more CAGR than previously. This is all I wanted to say in this video.